The markets run too much versus the fundamentals, which is one reason we got skewered today. Dow plunging 622 points, the S&P losing 2.8%, and the Nasdaq nosediving 3.20% off the rails.
Most people think investing starts with picking the right stock. It doesn't. It starts with understanding who you are as an investor and what you're trying to accomplish. Sometimes I'll do a video for a party of one. Hell, most of them are for a party of one. Nobody watches these things. But anyway, this is one of those times because recently one of my viewers reached out with a simple question.
I'm considering going long on April wheat. What do you think, Valentine?
What stock would you suggest to a new investor? And I'll be honest, that's not a simple question to answer. In fact, I didn't even text her back. I left her a voice message because there's no responsible way to suggest a stock without knowing a few key things. Things like investor experience, income and assets, tax situations, and how soon will you need the money. Any registered investor advisor would tell you the same thing. And just to be clear, I am not one of those. RIAs typically hold a Series 65 or 66 license. I hold a Series 26, which is a principal's license that's tied to annuities, mutual funds, and retirement products. So this isn't advice, this is perspective. Now, with that said, I did give her a starting point. If you're new to investing, especially if you're starting later, say middle age, it may make more sense to begin with mutual funds before jumping into individual stocks. And there are a few reasons for that. First, diversification. With a single stock, your entire investment is tied to one company. If that company struggles, then so does your portfolio.
You know the rules of the exchange, Mr. Duke. All accounts to be settled at the end of the day's trading, without exception.
You know perfectly well we don't have $394 million in cash.
Mutual funds, on the other hand, often are diversified by design. In many cases, at least 75% of the fund's assets are spread across multiple investments. That spreads your risk. Second, and this is my personal favorite, professional management. Most new investors don't have resources to hire a portfolio manager, but with mutual funds, you're essentially getting access to professional management at scale. Someone is actively reallocating assets, adjusting for market conditions, and making sure that the fund stays aligned with its stated objectives. That's valuable, especially when you're just starting out.
In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
Yeah, but we gotta kill them.
Third, liquidity. A lot of retirement vehicles lock down your money for long periods of time. Mutual funds are different. You can typically sell your shares at the end of any trading day at NAV or net asset value, and usually at a modest redemption fee.
Now you listen to me. I want trading reopened right now. Get those brokers back in here. Turn those machines back on. Turn those machines back on.
That flexibility matters, especially in these uncertain times. Now, here's one more thing for middle-aged investors. You want to look at balanced funds. These combine stocks for growth and bonds for stability. The common structure for middle-aged people is a 50-50 split. Half in equities, which have higher risk but higher potential for return, and your other half in bonds. These are lower risk, more stable, but have more exposure to inflation over time. That balance helps manage risk while allowing for growth at the same time. Now, before you do any of this stuff that I just stated and you have access to a 401k, you need to make sure that you max that out first because that's your most efficient starting point. So no, I did not give her a stock pick because investing isn't just about picking a winner, especially when you're starting out. It's about building a strategy that fits for your personal situation. So if you're new to investing, especially later in life, I really do hope that this helps.
Looking good, Billy Ray!
Feeling good, Louis.
Because the investment world is very complex, but there's always ways to approach it intelligently and responsibly. If you want more breakdowns like this, where we step outside the noise and focus on practical real-world decisions, stick with me here at the Independent Mail, because the goal isn't just to invest, it's to invest with understanding. Until next time, peace and stay informed.